Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. My friend Beimnet Abebe from Galaxy Trading, he and I are going to sit. We're going to review the last month. We haven't talked to Beimnet since, I think, early December. We had the Michael Saylor episode, the Michael Novogratz episode. We took a week off for the holidays. And by the way, welcome back. Hope everyone had a great and happy holiday break. We're going to talk with Beimnet about the markets, the economic data, update on his bear thesis, his near-term bear thesis, I should say. And it's going to be a very interesting conversation. I know you'll enjoy. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy any securities. Phineas, my friend, we are back.
We're back.
It's a new year.
New year.
Is it cold? It's cold.
It's
I
cold.
always complain about it being cold, but it is winter.
It's every year. It's the same. Why do we live here? We went down to Miami to shoot with Michael Saylor for the second year in a row, which was just lovely.
We should have spent more time. We were there for approximately 18 hours.
Same as last time.
Quick fly in
and out.
Shot down, and shot back. Do you have any New Year's resolutions, Phineas, that you're thinking about?
I'm trying to move slower in my day-to-day and just be more present.
Okay.
I'm trying to get my heart rate up as frequently each week. We talked about this. Yep. It's all about heart rate. You got to get your heart rate. As I'm aging, it's about heart rate.
Yeah.
And you know
those are good ones.
Be present, keep my heart rate up. I used to be like, oh, I'm going to go to the gym all the time. I'm going to change my diet. It's like, just get my heart rate up.
Even a brisk walk would do it.
A brisk walk, once a day.
That's a good one. I have that one as well.
Yeah.
And I'd also say, you know what? I'm going to, for the audience too, more rap.
Oh,
let's bring some raps back.
Bring back the raps?
Yeah, I mean, not this time, but, like conceptually.
Bring back the rap. I like it.
Bring back some raps. I've got some ideas for that. I've been talking with my friends at the Bitcoin Bugle. This is the satirical news magazine about Bitcoin. One of them, Rod Palmer, has got some banger beats. That was one of the reasons we stopped. Is I've made hip hop beats since like 2005, and we used a lot of them. In fact, every single one that we rapped on when I was doing the rap intros to the show, which was basically maybe the first 85 episodes in a row.
Unbelievable.
Those were on my beats as well, and I haven't really been actively making hip hop or any real music since I started working professionally in Bitcoin and crypto. I just don't have enough time. So it kind of just exhausted my library, and I didn't want to keep reusing the same beats. That was one of the reasons we stopped.
Yep.
So, but now that I've got the Bugle Boys maybe ready to make me some new beats, maybe we can get back into it.
We can do it.
Well, this is a fun one with Beimnet. We really haven't talked to him in a month, so it's good to get his update because, I mean, even as we write this is what, as we record this, January 7th, S&P 500 hit an intraday all-time high today, yet Bitcoin, trudging along at 91 over my shoulder.
Interesting to hear Beimnet's take. I mean, it does still feel like we're in a similar-ish. Everyone's sort of waiting for.
Yeah, it doesn't feel like crazy bearish. Nobody's like, oh my God, Bitcoin has failed or anything like that.
Doesn't feel super bullish, doesn't feel super bearish, but the nuances of that are interesting.
We're kind of in this range. It doesn't feel like it has decided to go lower or resume its uptrend. So what do you do in a spot like that? You just kind of hold it or something? That's what I do. But, well, he's got some interesting takes. So let's hop. And we no guest this week. I should make explicitly clear. But we've got a good guest for you next week. And let's hop right into it with Beimnet Abebe. Let's go now to our friend Beimnet Abebe from Galaxy Trading. Beimnet, as always, welcome to Galaxy Brains.
Thank you for having me.
2026, it's a new year. We haven't talked to you in a month, I think, because we did the Saylor episode, which you weren't on. You weren't in Miami with us this time.
Thanks for the invite.
Yeah, and then we did Novo, and I think you were busy, and then we took a week off. And so, lots to catch up on. Maybe I want to talk to you about markets generally and what has happened over the last month. We want to check in on your current views on Bitcoin.
Yeah.
I think the last episode with you, I don't know if it was the last one you were on, but we did one with just you about a month ago that was called Navigating the Bitcoin Bear Market. And we enunciated some of your, near and medium term bear thesis. So I want to check up on that. But before anything, maybe just give us a little bit of an overview of like where the macro indicators are and what like the whatever data we've seen in the last month or so. Like is inflation up or down? What the employment numbers look like? What can you say about the general state?
Yeah, it's a very hard set of circumstances to analyze because there's just like a lot of like weird dynamics. Generally speaking, the econ data suggests that we're doing just fine. GDP printed a 4 handle, although it's likely to get revised lower. The employment picture seems fine. Just looking at like the outright level of initial jobless claims, you had job openings actually tick up today, and the employment portion of the ISM Services Index also went up. Now the question is, how much of that is stemming from like employment supply that has gone down as a function of immigration versus like increased demand for workers. So it's like a bit tricky to analyze. And then on the price stuff, prices are elevated depending on like what you're looking at. So take ISM Manufacturing that came out yesterday. It printed in contractionary territory, but prices paid were super elevated. Same thing with prices paid for, ISM services. And then you have this very large start of year effect to inflation figures that's been present since COVID, basically, where you get a lot of prices that increase at the start of the year that show up in the data even when it's seasonally adjusted. So like, healthcare premiums going up day one, like,
Everybody raises prices every year, basically.
Correct,
for stuff.
correct. And so there's like a seasonal effect to that. But there's also some other dynamics that are, a little bit concerning. One, there's a lot of people that are going to have to start paying a lot more money for insurance as a function of, the legislative kind of situation with Obamacare.
Mm-hmm.
And I think 23 million people are being moved off of Obamacare that now need to enroll in private insurance or not have insurance. So that's a big deal. There's also wage garnishment that is starting for folks that are behind on student loan payments. And so like there's a weird set of conditions to start the year. And then like there's really like a big dispersion within like certain industries. Like obviously the AI data center build out stuff is going really well. But if you look at like, home builders, right? Home builders, like the average price that they're selling at is coming down. Trump just announced today that he's going to try to make corporations not be able to buy residential properties. And you have pockets of formerly hot real estate markets like Austin, Texas, and Miami that have like some troubling signals where like I think I was looking at something in Austin where like 80% of homes that have been on the market have had price reductions. That's a really high one.
That's a regional thing.
That's
with
a regional
Austin,
thing.
But yeah.
But there are lots of pockets, and you have this dynamic where the people that are in low mortgages want to sell their homes, or the ones that do want to sell their homes at least, they're expecting like far higher prices than what people that are going to have to buy the house paying a 6-7% mortgage are willing to pay for. So you have like the market's still kind of like a little stalled out. But I think the biggest thing to pay attention to in terms of data on a go forward basis is really kind of like the employment picture. So if you look at like underemployment, it's pretty elevated at like right around like 8.3%. And the thing that would actually crack the housing market is like a slowdown in the labor market. Now, time will tell if that will happen because, like AI, like it takes a long time for those efficiencies and for people to like cut all the way that they want to.
I am concerned about the
robotics.
AI because this is one of the things that I saw over the holiday break was a lot of top engineers in the world, including I think the principal engineer at Google, tweeting just shock and awe at the unbelievable power of things like Claude and Cursor. The Google engineer said, don't quote me exactly on, I can't recall the exact text, but it was something to the effect of they had spent the weekend coding with Claude and that they accomplished more in a weekend than their whole team had in a year 2 years ago, or something like that.
Yeah, it had to do with agent coordination, and she's apparently one of the top programmers in the world, and they had a whole team working on one solution for a whole year that Claude effectively solved over
the weekend. And many other top developers, like at big companies, basically came out and echoed the same thing. You saw testimonials on social media of some of them expressing amazement and others bewilderment, confusion at the fact that it was all of them saying the same thing.
Yeah, and Elon
some even
tweeted,
remorse.
Yeah,
that Elon tweeted that he thinks this was the year of singularity. And so I would say the AI like labor job loss or impact that it may have has not reared its head yet. It doesn't feel, but it seems like every day we get closer to that. That's going to be a very interesting.
You have to pay attention to that. But the stuff that's been on the headlines, like first and foremost, has been the geopolitical stuff.
Yeah.
Right. We just took out the leader of a nation.
We
not took out,
captured him.
Captured him. And depending on how you think about it, that is a little bit unprecedented.
I would say it's rare. It's certainly unprecedented in recent history, but it's also, I think, to cut to your main point, it's destabilizing, right? Like
correct,
and it hints at sort of a breakdown of the international order to the extent that it
absolutely,
exists. Yeah.
And there's some more tensions around Greenland. There, is tension around Japan, Taiwan, and China. Obviously, China just did massive exercises. There's some back and forth with Japan directly in terms of like some export curbs starting now.
I saw that.
And then the U.S. just took over a Russian flagged oil tanker. And so the geopolitical tensions are a touch elevated. You wouldn't know that by looking at the VIX, which is kind of still on a 15 handle, and that I think it feels mispriced to me. Feel like people are not expecting as much variance as there likely is going to be. But yeah, if you talk to most people in terms of what they're thinking about, risk markets, most forecasts are for the S&P to finish higher at the start of next year or by the end of this year.
Yep.
Call it on the order of like 10% plus or minus, a little bit.
I always think about this. You love The West Wing like I do. You remember the episode where President Bartlett, he's like, nobody knows what the economy is going to do. He's like, here, look, I got two of the smartest guys. He's like, Bob, you're my national economic advisor. Where's the Dow end the end of the year? He's like, terrible, down 1,000. And he's like, John, you're the head of the Treasury. Where's it end? He's like, great, up 1,000.
Yeah.
Right? Like, I don't know. When I hear people say like 10%, it's like, it's pretty safe, moderately bullish call, right? Like,
yeah,
no
exactly.
one really knows.
No, it's tough. And it's also like, if it ends up 10, but it had a down 30% correction before it went up 10, like, did you
Which
really?
is kind of, we had that this year. Last year, I guess.
Yeah. And so,
In fact,
the path is going to be very interesting.
Let's talk a little bit more about stocks. And I want to talk about gold and silver, which is silver and by the way, other lesser metals have also ripped. Nickel and copper. Saw platinum. And I want to ask you about that. But first, I was just looking at the chart. Did we hit an intraday all-time S&P 500 high like today?
Yeah, basically.
Yeah, it looked like it.
I think futures
and if not,
got to 7,007, which is like
I was
effectively an all-time high before they dipped lower.
Yeah, and I was looking back because it felt like we kind of limped into the end of the year, but actually we did okay though. The real dip was around Thanksgiving. Got all the way down to like 6,500 on the S&P, but otherwise finished pretty strong, and that was with a major correction in April last year that obviously affected with around the tariff announcement and then the walk back. And then gold continues to trade well.
Yeah.
Silver mooned since we last spoke.
Yeah.
And yet, and I would say Bitcoin had a nice little bump. We'll get to Bitcoin in a second. Had a nice little bump basically over the last couple days, some of which is retracing over my shoulder, as you can see, to 91. But, what did you make of that price action, and what is going on with the rotation into the lesser? We know gold performed great; it was up 30+% last year. But Is it just sort of like, is it like in crypto where it's like Bitcoin runs, then Ether runs, and the altcoins run? Is that what's happening in the lesser metals, or is there something more? Like, why are
There's
people buying
something
nickel?
much more.
Why are they buying copper?
Well, there's going to be copper shortages, especially if you have like a bunch of rebuilding efforts. Let's say there's like peace between Ukraine and Russia. You got to rebuild all of Ukraine. You got to rebuild Gaza, right? And if we're there's
So commodities in
there's
those
practical
that's one.
use cases, and
Yeah.
there's like physical storage because physical shortages because people didn't anticipate a lot of the activity. Like for example, like silver is very practical for
Electronics,
the
right?
electronics and the semiconductor industry.
Yeah.
So there's actual like real demand for physical silver, and there hasn't been any additional capacity added to like silver mining like over the past couple of years because this AI trend was like fairly kind of recent. So there's actual physical demand, and then you've just had a shit ton of central bank buying of both assets.
Yeah.
Right, because folks
a lot of speculation too, though, right?
There's some speculation, but really, it's like, guys, like, this is the trade.
Is this part of your? We talked about this on a prior episode, but you pointed out that I think 12 of the last 13, 10% or more S&P corrections, with the 13th being last April, the dollar appreciated during those corrections, but in April it depreciated. And meaning that people theoretically were selling risk assets and looking for something other than the dollar to park their money in, and perhaps gold was one of those answers. Is that also part of this trade, that like
100%.
these non-sovereign metals look like a good?
Yeah, I mean, like if you're a central bank that isn't the Fed, right? You already have a huge proportion of your assets in dollar-based like reserves. If you're a huge asset manager, FX reserve manager, et cetera, like you measure yourself in dollars. You're based in dollars, and so now that folks are kind of like losing confidence in the fiscal situation in the U.S., where we printed an insanely high deficit number for last year, even though we weren't in a recession or we weren't even in an all
and
outright
we had
war.
Tariff revenues,
Correct,
supposedly,
but
right?
we're still printing insane, deficits. And if you think about it, like, what's the response function next time, like the market corrects or you have a recession? They're just going to print more,
printing, yeah.
Right? And it makes the debt issue that much worse. And so people are really beginning to look through as to like what the end game is, right? And folks that are thinking about the end game realize that there's really only like. It's a flight to quality.
There's not much.
You can't really buy debt in Japan because it's been selling off like crazy.
Most financial assets aren't going to work here.
Right?
You can't park your money in wood. It deteriorates.
Correct.
Right?
And so people are looking for liquid, large ways to protect their wealth and preserve purchasing power. And folks are looking at the money that's been around the longest.
Commodity
that has
metals.
always,
Yeah.
And so, gold has really taken that place. And if you think about it, like, not many people are gold denominated investors, but the S&P actually had a down year.
Yeah.
In gold terms.
I think, correct me if you
and
looked
it's
at this.
much worse in silver terms.
It might actually be based, the all-time high might have been like 50 or 75 years ago in gold terms, actually, for the stock market. I think I've seen that chart before from Gold Bugs.
I need to look
We're
at
actually,
it. Yeah.
we're not, it's kind of inflation, almost all of the growth.
Correct.
That's ever been done.
Right. And so if you think about like the most durable money that we've had in history, by definition, it's gold. And if you think about the performance of any asset, whether it's, real estate, AI names, whatever it is, like relative to gold, it's tough. And what you have to think about also is like, it's not like gold's moving up and down 5% a day. You don't have to stomach like 10% corrections on a Sunday night. Like, it is deeply liquid.
Yeah. And
it's low vol and it's performing real well. And there are people printing fake money to buy this thing. So I don't see the gold trend slowing down. I don't see the silver trend slowing down either. There's some interesting analysis that I read a couple weeks ago, right before the start of the year, where it said that if 10 to 15% of COMEX futures request physical delivery, that would deplete the entire physical stock available on COMEX. And so there is actually like
There's real
because of the
scarcity. It's
hyper-financialization.
almost a squeezy.
Correct. It's very squeezy. And personally, I think silver above $100 is not crazy. And I think gold 5K is not crazy.
Yeah.
And, maybe, it takes time to get there.
It's kind of
But it's
incredible
just, yeah.
kind of incredible it didn't run there in 2021 with the printing that happened then, frankly. In some ways, it feels a little bit like a catch-up trade for gold, which did okay, but didn't really run. I mean, with the printing that happened in COVID, you'd think it would have instantly mooned. But that was the thing that Paul Tudor Jones said. I mean, it did go up, but Bitcoin went up faster. And let's use this as a good time to transition now to talking about the digital gold.
Yeah.
Before we talk about the price action and a little bit of your thesis, let's stick on this topic, which is when, if ever, will people turn to digital gold for this non-sovereign, hedging asset? I mean,
Right.
because this is one, I think it's a little bit unfair to the Bitcoiners considering it's up like 6.5, 7x from Jan 1, 2023. It ran harder first and then gold ran a bit. But a lot of people in markets were looking at gold's outperformance of Bitcoin last year as a sort of like a peculiar thing. In fact, if you look at all major assets, Bitcoin's pretty much the only one that finished down last year.
Yeah.
When,
That's why
if
there's
ever,
a lot of tax law service selling and a bunch of
Right.
crypto-related products. Yeah.
when, if ever, or what will it take in your mind for Bitcoin to be utilized
people
more in this way?
When people are like, I really would rather like move around with I've realized that fiat is so bad that I actually need to think about moving around and paying with stuff and like
Using
doing
different
real
asset,
things,
yeah.
or like I'm gonna move to Switzerland. Like what you're gonna, you know how heavy like
Right,
$1
you
million
can't bring your
worth-
gold.
right? And so
So-
when you have that kind of like realization,
interesting.
I think you'll kind of see the transition to Bitcoin, but it is an eventuality because the math around the debt and just the general level of uncertainty right now, I think it's an eventuality that Bitcoin will kind of have its moment.
Yeah.
I just don't think that moment is anytime within the next 9 months.
Yeah. So let's talk about that because Bitcoin, it went down to like 79, 78 when it was,
Or when central banks buy BTC.
Yeah.
as well.
Well, we
That's
did
also another
technically have
Czech Republic.
the
trade
Czech Republic's
test.
$1 million. I like that they called it a test because they don't want to upset the EU and like the European Central Bank, which they're a member of the trustee board or whatever it is. Even though they had previously put out a paper like 9 months before saying they actually might buy it for their FX reserves. Then when they did buy this million, they took pains to say that it wasn't in their FX bucket. It was a test. But so I think we'll see that start. But I agree. But it had that near term sort of cycle bottom so far in the high 70s. It briefly wicked down there, but mostly we've been ranging in like the 80 to 90 range for like a month and a half at this point.
Yeah.
We just broke out a little bit, got up to 94.
94, yeah.
Now we're that was yesterday, today 91. But first of all, what was that little breakout, and did that at all impact or adjust your near-term bear thesis? Or
so the bear thesis is medium term. I actually played it from the long side to start the year. If you think back to what happened in the month of December, you had a tremendous amount of tax loss harvest selling.
Because it was the only asset that was down.
Correct.
That most people own, that a lot of people own.
So there's a lot of like crypto equity names that were sold because, again, if you had a portfolio that was mixed, like these were the only names that were
right.
down.
I mean, if you were owning like stocks, stock
Correct.
indices, commodities,
Right.
real estate, pretty much everything was up except Bitcoin.
Yeah.
And
so,
obviously other cryptos were down much worse.
And the DATs lost their ability to purchase in a meaningful way, or it was hindered a little bit. And so you had a bunch of selling going into in December for tax reasons, and so that led to like basically seller exhaustion. And to start the year, you had a bunch of crypto hedge funds, managers that have a crypto mandate, et cetera, all essentially underweight the asset after a period of heavy selling, and there was just seller exhaustion. And so you got to the point where the path of least resistance became higher, and there was some short liquidations that you could do. There was a technical breakout of like kind of the moving
trend line
average,
and
the
stuff,
trend line, et cetera. And so it was a pretty clean setup to get up to 94. Now things are a little bit trickier. I think that if equities like continue to break all-time highs, I think there's a reasonable chance that you kind of go to 100 or like somewhere around there, like 98, 99, 100. And that will kind of be like the last stop before a resumption of the trend lower is kind of my view. The technical chart that I look at the most is the 50, 200-week moving average setup. And as long as we're below that 50-week moving average, it strongly suggests a move to the 200-week moving average, which is what we've seen in most
past
cycles.
Yeah.
And that thesis still holds. And I would say that during the 2022 bear market, you did see a retest of that 50-week moving average after
before then again went lower.
Then again went lower. And so it would not shock me to see us back at 98, 99, 100 to kind of retest that breakdown area.
Yeah.
And if you get confirmation, if like a firm rejection from that level, then it tells you that the target is in place and that, it will.
And conversely, to your point, what you'd want to see to invalidate this would be
strong
weekly closes above that 50-week moving average, which
correct,
is, or like the 100-ish area.
Yeah.
And I think just for our audience, I haven't looked in a few days, but I believe the 200-week moving average is somewhere around 60 or high 50s at the moment. So, which frankly, considering we went to 78 like in October, like it's not really crazy. And I should point out, I mean,
it is crazy in the context of like what has happened, since the election. We got a pro-crypto president,
right,
a pro-crypto administration, a ton of ETF inflows, new DATs,
that was one of the big,
and yet you couldn't really make. You went lower.
Yeah,
like that's not a good sign.
Year to date or yearly, year over year, or whatever. The 1 year last year was down. It's actually crazy to think about, considering how much positive news and not just news, real catalysts. Right, I agree. And I think this is actually something that a lot of people thought in 21, Bitcoiners, that 21 didn't go high enough. That people thought maybe it really was that maybe like FTX was selling Bitcoin. Right, there's a bunch of conspiracy theories about like the cycle, they're decaying and but it really should have gone higher given all the positive catalysts and people.
No, I mean
both in 21, but not now, of course. In
what
25.
You're saying? Look inside the house. Why
the calls
isn't it
coming from inside the house?
The calls coming from inside the house. The on-chain data suggests it is whale selling.
That's true. There were a lot of whale selling.
That's why we did not go higher.
And the crazy thing too about you mentioned the ETFs. The ETFs, like Bitcoin was down almost 30% or even slightly more at its lowest point there. Finished the year down, and even year over year, but also, but the ETF inflows, the net inflows were only down 9%. So ETF holders mostly held in the scheme of things, which is pretty fascinating.
Yeah.
Right, down way less than the price action. So it's also quite interesting. So you're still
again though, we might be tactically bearish, right? Let's say over the next 6 to 9 months. But if you're an investor that's thinking, for a decade, 5, 10 years, the investment philosophy is still pretty simple. Dollar cost averaging.
Right. You still obviously Bitcoin in the long run.
In the long run, it's going to do just fine.
Yeah.
But, right here, right now, if you're trying to play it from the short side, I think, it's probably prudent to get better risk reward closer to that 50-week moving average. If you're playing it from the long side, I actually think why not wait for some volatility potentially and try to get an 80 handle or 70 handle.
It's a pretty clear thesis you've got, which is bullish closed over the 50, bearish if it doesn't, and that's what you're watching. And you say you pointed this out when we last spoke too, that it's not like it was going to zoom down to the 200. It's not like this thing's breaking down right now. It's just that the trend feels lower until it doesn't.
Correct.
And it still does in your mind. It's very interesting.
Still does because we've spoken about this concept before, but reflexivity, right? One of the reasons that we rallied so hard was because we rally, that premiums go up, and then they can buy more, etc. You don't really have that as much now.
Right.
Right. And it's reflexive to the downside because, all of a sudden that start trading at a really, really deep discount.
Some have even sold.
What are they meant to do?
Yeah.
Right. And I also think that in this marketplace, it's an attention-oriented market, right? People don't really care about valuations that much. People care about what's the hot thing.
It's very momentum driven.
Very momentum-y. And right now there's a lot of retail playing in, nuclear stocks.
I saw it.
In other kind of meme-related names, in prediction markets.
Commodities.
In sports betting, in commodities.
Yeah.
In, silver miners and junior gold miners.
Yeah.
And the other thing that I think, people really miss is a lot of market participants that have been in crypto for a long time have really matured, aka aged.
Yeah.
Right? And,
they have other priorities now.
Take yourself, for example, right? Like 10 years ago, right? Like you could probably have 90% of your wealth in Bitcoin and it wouldn't matter to you.
That's right.
Because it's early in your investment career.
I got a family now.
Now you got a family.
You got obligations.
Yeah. etc. And you've also seen the market and like all the other things that like you can make money on.
Yeah.
Right? Versus like prior, like this was the hot thing because you had these like insane like return profiles.
Yeah.
But now, like
it's a more mature asset.
Much more mature asset.
Yeah.
It's law of large numbers. Like
it
takes more force to get something that's worth $2 trillion to $3 trillion than it does like $100 to like 1,000.
Yeah, you're totally right.
Market cap, right? So, I think this is just progress, right? And progress is real slow and it ebbs and flows. And I think what you just need to see happen is, a transfer of Bitcoin to folks that will hold it, over the long. Oh, let me put it differently. Bitcoin just needs to get to a value area for people to step back in again. Mm-hmm. And I just think that value area is lower than here.
Yeah, I think it's well articulated. Beimnet Abebe, Galaxy Trading, my friend. Thank you so much.
Thanks for having me.
That's it for this week's episode of Galaxy Brains. Thank you to our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week.